Right, going live. All right, and it looks like we are live. So welcome everybody. This is Ivan Delgado, market commentator at Global Prime for Forex. I am here today with my my partner in crime. That is Terry. Terry is, as many of you know, he has been a client of Global Prime for quite a while. And today, the two of us, we're going to be touching on building a watch list. What is it in terms of factors and elements that we're going to be keeping in mind. And by the way, for those of you that have yet to join, or that they actually, let me just rephrase that. For those of you that have joined, do you mind letting us know if the sound and the image is on point, please? As usual, I want to just kind of like provide excellence in these streams. And last time around, there was a bit of a technical hiccup. So if you don't mind just tapping on the chat box, it'll be great. And by the way, Terry, how are you doing? All good on your side?
Yeah, good. Thank you. Hello to everyone. Yeah.
Yeah. So just Terry was just telling me that this weekend has been a little bit wetty in Australia. Any other highlights?
Oh no, but yeah, as I was saying, we've been. I think yesterday we had the wettest day that we've had for 20 years. So
Wow.
it just rained solid all day, and this morning has been very wet too. But just starting to clear up now, so might be able to take the dog out for a walk this afternoon, maybe.
Perfect. All right. So we got Prince Dan, all good, fantastic. Okay, so now we have the official go to get started. So essentially, for those that may have been living under a rock or are taking it a little bit easier now that we're entering into the summer season, so we saw on Friday the U.S. non-farm payrolls, and that announcement and the printing of the jobs plus like the headline number plus the jobless rate, and essentially the key metrics that the market is going to be looking at were pretty much Goldilocks for equities, and we've seen a rampage of demand into mainly the Nasdaq 100, and then the S&P 500 and the Dow Jones playing a bit more of a catch-up. But before I get into the market that have been the main movers and what's going to actually be moving the needle for me and for Terry to be selecting our watch list, let me first, how about if I go through the markets that heading into this week are looking pretty timid, are looking pretty tepid, and I am not really that compelled, and that would be the Forex market. So the Forex market, as many of you know, we went through let me just grab the drawing tool here. We went through an explosion of volatility, an expansion of volatility in the US dollar index mainly. Last week in my mentor room, we actually had a number of opportunities that were made available in the dollar Canadian, short pound US dollar, and so forth. And what you'll notice is that the main thematic, with the exception of the euro index, so I'm showing you here the indices, so that actually is going to be capturing very nicely the state of affairs in the FX market. So yes, there's been a little bit of an increase in volatility. So essentially in this second window, what I'm showing you here is the BBW, or the Bollinger Band width, which is actually a very nice indicator to tell us the amount of volatility that exists in these currencies at an index level, which captures, like, instead of navigating through euro US dollar, euro pound, euro Australian dollar, how about if you just look at the euro index, and that's going to be telling you the whole picture, right? So other than the euro index, the majority of other currencies, the pound volatility is collapsing and we are within no man's land. The US dollar index, it looks like that US non-farm payrolls is starting to take a toll a little bit in the US dollar, but what really matters here is that we are somewhere in that midpoint of the Bollinger Band width, the kind of like what I would call the mean area, and so that tells us that volatility is drying up in the US dollar index as well. The Canadian index, we've seen a bit more of a volatility, but below the mean area. Same can be said about the JPY. Notice here that we've had 6 or 7 candles in a row on an 8-hour candle basis. So essentially that means session by session flows. Not really much in the Australian index. And I also want to remind you that tomorrow we got the RBA, and the RBA is a highly anticipated monetary meeting that we got this week, and it's really going to be dominating the headlines. And the reason being is because the RBA has been engaging in what it's called, some a term that we're very familiar with, and that is QE. And there's chatter that they're going to be starting to taper the QE amounts and curtailing that, plus whatever news come in terms of the yield curve control, that is going to have an impact on the Aussie. So the market is really not moving until the RBA. The New Zealand index, same thing, and not to mention the CHF, which is a chop fest, and the index once again really is manifesting that out quite nicely. Okay, so that's where we stand in terms of the FX index. So bottom line, I personally am ditching forex pairs altogether until there is further clarity. Now, let's start looking into the markets that really have made a statement of intent. And here I would say that I got two main fronts open for this week. And one is stock indices, even though the high flyers, including the NASDAQ and others like the Dow Jones and the S&P 500, they actually seem to be getting a little bit out of whack. Like the NASDAQ 100, look at this. I mean, you really want to get involved into these markets, not when we've gone into such an elongated market movement, but rather ahead of it. And for those that have been part of my mentor room, there was a trade available, what we would call one of the three types that we have available, and that would be a pullback trade right there. It was very well documented. I am making Loom videos, the majority of them whenever I find the time, but I'm trying to make them as these setups occur. We have a private all trade setups channel, so you actually can have full access to those views. Okay, so we did have that pullback trade right there, but ever since it's been a one-way street, and certainly not a market that short term I'm interested. Now, if we do see a pullback into the CL, as it happened right there, right here, and a few other times in the past, that's gonna keep my interest still pretty high in the NASDAQ, but still, I'm rather prudent that this market looks like it is elongating. And if I were to actually expand the volumes, not the volume profile, but the volume in the x-axis, I would consider this market to be moving in the right direction with the wrong volume dynamics. Notice that the volume started to pick up, meaning smart money institutions, hedge funds, you name them, the real money were rather involved in here, but as we keep moving higher, we have what I call a false acceleration. And a false acceleration essentially is decreasing in volume all the way till this very last push on Friday, carried in terms of tick volume, because I'm looking at data from Global Prime, even though it's going to be rather representative, it's very low, so you don't really want to see at the end of such an elongated movement this low tick volume. Okay, so something just to bear in mind, even though I've selected these markets. Now, aside from stock indices, there's one that has been such a resilient and stubborn market, and that is crude oil. Now, those that are part of my mentor room, they know that I typically don't trade oil, but this candle right here, this is a textbook fade setup, okay? So essentially what we can distill this into the lower time frames, like for example, the daily. And so whenever you see such a well-defined range right here, you got all the lows, and it looks like the market is about to break out. It did actually break out, visited these lows, and it rejected massively. So the moment that we have that type of pattern, a retest back into this supply that got consumed or absorbed, if you want to call it, that is most likely going to lead to the next phase of the market retesting the previous session at range highs. Okay, and that's actually what has occurred. I have not been involved in this market at all. I don't typically trade oil, even though we're also covering oil. So these are the markets in terms of the let's just call it the legacy or the traditional markets. Now, when it comes to cryptos, and I'm going to be stopping now, I'm going to let Terry introduce his watch list, and then I will go back and forth so it doesn't kind of become a monologue where I'm just the one talking here. But in terms of the one market that to me, it is the what is offering the most pristine signals this week, believe it or not, even though I told you last week that ALT versus BTC for the most part look like rubbish and there's a lot of garbage out there, I'm starting to see a few outliers, okay? And these outliers, something that I'm starting to outline in the watch list, and I'll be touching on all these markets, well, in some of these markets that have been really making a nice movement, and also in the ones that might be setting up soon. The one thing that I'll say is that this is all, well, partly caused by an important breakout we had in Ethereum BTC. Ethereum BTC is starting to break out into an air pocket. Wait, let me just show you. Into an air pocket or a voidness area where I might be actually expecting that we have further follow through, but we are not yet seeing the volumes, okay? We've seen this breakout over the weekend, and the weekend carried pretty low volume on Binance. So I'm actually waiting prudently to see where this is going to be taking us. But I am taking notice of ALT versus BTC, okay? So Terry, the ball is on your court now. Take the floor.
Okay, what did you want me to talk about, Ivan?
Well, I mean, how about if you can just walk us through some of the markets that you may have noticed convergence between different cycles, short-term, long-term.
Okay.
Last Friday, you were pointing out New Zealand JPY longs as an attractive asset that could see a move to the upside. So perhaps just walk us through the ones that you've been most focused as of late.
Well, you notice on the on the left-hand side of my screen that I have these different coloured icons alongside each of those symbols, and I use those to determine what I'm watching for the week. So every Sunday I go through, I do my scan, I make sure the cycles are looking how they should look, and then I set up these icons on the side. Now, if it's just a circle, it means I'm not interested, so the cycles aren't lining up properly. But if you see a star there, or a flag, or a tick, that means I'm interested in those ones from there up. And one of the ones I did mention last week was New Zealand Yen, which you can see on here now. Now, the reason I've chosen New Zealand Yen as a potential trade is because, I'll just enlarge this a bit here, hang on a tick, is because what you can see quite clearly is that the long-term dominant cycle, this is on the 8-hour time frame, which is a time frame that I'm trading this pair. The long-term dominant cycle is the red line, and the short-term dominant cycle is the green line that you can see here. And what we're aiming to do is we're aiming to pick up a trade when those two ideally become aligned with each other.
Correct.
So what I'm looking for here is the long-term dominant cycle, for example, to bottom, and the short-term dominant cycle to come into alignment with it. And you can see that's occurred at this point just here. Both of them have come into alignment with each other. And that to me signals a long entry. Now, I've actually taken a long entry on this trade, on that retracement just there, and on that almost a pin bar candle there, I guess you could call it, but on that candle there, and I've taken a long entry at that point based on these cycles. In addition to that, I also look at the daily cycle. And if we go to the daily on this one, we can see that the daily is actually the long-term dominant cycle on the daily is heading higher, which is supporting my move. The short-term dominant cycle is starting to peak and roll over. So I'm expecting a little bit of sideways pressure from the daily cycle because we've got one cycle rising. We've got the other cycle falling. So I'm expecting a little bit of sideways pressure over the next couple of days.
Let me just pause for a second. Can you just go back to the daily in New Zealand JPY? Because at the end of the day, it's going to be a rather convoluted and cumbersome exercise if we are waiting for absolutely every single element to be lining up in our favor. So I found that the preponderance of evidence seems to be working best. Like for instance, we've gone down to the 8-hour and that seems to be in perfect alignment. We've got 2 out of 2, short-term and long-term, both departing off the bottom or the trough, right? And that seems to suggest that this chart in particular is going to show a rather upward motion or traction. Now out of the daily, we got 1 out of 2. So that makes it, if you're going to be choosing, and that is the real kicker here. It's like what combination of trading timeframes you're going to be using. And in your case, 8 hour plus daily. 3 out of 4 are communicating that the path of this resistance is going to be to the upside. So to me, that, even though you might mention, yes, there seems to be a bit of a risk based on the daily that we have not that dominant cycle heading lower. But still, the preponderance of evidence seems to suggest that there are more forces that may take us higher than lower.
Yes, and what I've found too is that really the red line, the long-term dominant cycle, is the key one that you should be following. That's the one that generally is more stable and seems to provide more strength for the move than the short-term dominant cycle does.
Correct. And just for those that may not be familiar with the dynamics and the goings of the mentor room, the one that I am leading is Terry. At the beginning of every week, he provides his analysis, and I personally tend to take this into I highly regard Terry's work, and I'm going to be taking this into consideration, even though this is an approach that does not get to be incorporated as part of the entries that I am teaching students in the room per se. It is more about backing up our entries with cycles, and knowing that we have someone so committed as Terry, which I've come to I guess rename his profile as the cycle wizard. Like really, he really is into every cycle, and at times we are going to be entering a trade, and I have to then next ask myself, in terms of calibration of risk taking, what that cycle looks like. And you can actually ask Terry for a request, and really within the same day we're going to also understand what the time-based cycle looks like. And I've always been very, very, very careful, because at the end of the day, when you have a strategy, you really want to analyze the components that really matter. And to me, it boils down to what's the market structure, what is the momentum or the energetic force of this market, what are the supports and resistances, which at the end of the day is a universal term to understand where the stacks of orders exist. And as a byproduct of these stacks of orders in any asset class, you're going to have reactions and responses at certain price points, and that's what creates supports and resistances. You account for that. So I've been very cautious of letting especially more noise coming into the strategy that students get to learn. But whenever there is something that is so unique and so outside of the realm that I've been teaching, like time-based cycle, to me it adds as an assisting tool for us to make even better informed decisions. So we do take this into consideration, and that's why those that are joining these live streams can see that we have a bit of a back and forth discussion, whereby I am talking about my strategy and the entries that get to be triggered. But at the same time, we got Terry giving us a bit of a perspective on the cycle front as well. So Terry, any other market that it looks like Aussie Canadian has been highlighted, Euro CHF, and a few bunch of others?
Most of these trades are trades that I've been in for quite a while,
right?
Because I tend to ride this long-term red wave, so I can be in a trade for a month, for example. But a new trade that I just took this morning, which I did mention in the mentor room as well, was a silver long against the US dollar. And you can see again that we've got the bottoming of the long-term dominant cycle. So that's what piques my interest to go long once I see the red one starting to turn and head back up in the opposite direction. Now, in this situation here, I'm pretty much going against the short-term cycle on this time frame. But as Ivan mentioned before, if we look at the daily time frame, you can see the daily, long-term and short-term cycle is in my favour. So once again, I have 3 out of 4 in my favour.
And stay on the daily, because I mean, this is a long-term cycle that might actually run as far into the future as mid to late September.
Yeah. Yeah, so this is where I'll certainly be starting to look to exit this trade is up
Yeah.
around the September area. So I'm hoping for a good solid silver run into that area. But my entries in this one are 12 hour. And so I do use different time frames. As
Correct.
you can see, I was
And
using the 8 hour before.
yeah.
I'm using the 12 hour on
And
this one.
just to remind the audience, because the first time around we had a bit of an issue with the audio first 30 to 35 minutes. So essentially what Terry is going to be doing is he's going to be playing back and forth between the, I believe is the 8 hour and the 12 hours, right? Those
and the 4 hour
and
as
the
well.
4 hour.
Yeah.
And whichever time frame aligns best with the cycle highlighter, which is like, can you just remind us once again the cycle highlighter and how you actually get to pick the best time frames?
Yep. Okay, so hopefully you can all see that there's a light blue dotted line there.
There you go.
And that line is the cycle highlighter.
Mm-hmm.
And what I'm looking for is I'm trying to align troughs with peaks.
Mm-hmm.
So I'm placing a sine wave over the top of the cycle highlighter, and I'm trying to align troughs with peaks.
Yeah.
So I'm not looking for a perfect alignment. You can see here, this is far from a perfect alignment, but you can see quite clearly I have a peak here in line with my sine wave, with my red sine wave. I have a trough in line. I have a peak that's off a little bit. This one's not great, but then it comes back into alignment just here. So that gives me confidence to use this.
Yeah,
now,
and at the end of the day, when you zoom out, it's like, hey, around a 70 to 80% accuracy on the cycle highlighter.
Yeah. And so what that does for me is if this doesn't align, then I'll go down to the 8 hour time frame and then the 4 hour time frame and try and pick the one that matches it the best. And that's how I determine which time frame I'm going to actually trade. So for silver, it's the 12 hour time frame. That's the one that fits that cycle highlighter the best. So this is another trade that I entered. I entered this trade this morning based on cycle analysis alone, and of course, quite clearly there from Ivan's teachings, you've got a nice clean break of structure. And so that was also part of what I used for the entry as well.
And something also important is that do not for a second treat these cycles as something that is fixed in stone, because it looks like in the long-term cycle of the 12 hour in the silver market, we are not yet in that kind of departure and heading a high into those this expected trend till mid-September. But if we get into if that red dot gets close enough to the trough, that would kind of, I suppose, in your opinion, correct me if I'm wrong, but that would already validate that we are close enough to what looks like a near departure of the bottom.
Yeah, what you need to do is, I mean, let's say that you can see my crosshair there, hopefully.
Yeah.
Let's say that the red dot or the price was, let's say, around about this level.
Yeah.
I would still, from that point on, start to look for longs.
Yeah.
But I would base that information on the short-term dominant cycle as well. And you can see quite clearly here that even though the long-term dominant cycle has a couple of days more yet before it hits the exact bottom, the short-term dominant cycle was actually heading up at my point of entry. And that starts heading down as this one does hit the bottom. So I expect to see a bit of consolidation around this level. Mm-hmm. What interested me was this very strong breakout of structure that you can see just here at this level.
Absolutely.
At this level, so that confluence of events. And I said to you last week, you don't trade the forecast. The cycles give us the forecast. We don't trade the forecast, we trade the price. Exactly. And the price structure is the most important thing here.
And this is something that I often, I'm a proponent of it. Like whenever you see from a macro perspective, and let's just shift our focus for a second into the crypto market, right? So let me just remove your window, and I'm gonna get back into my own window, and let's just go into the BTC US dollar, because there has definitely been some signs that the crypto market is yet to see its ultimate top of this cycle. But what the reality is that BTC US dollar has been plummeting, has actually been selling off for 50%, and technicals are nowhere to be found in terms of what you'd like to see. I mean, we continue to be very much in a choppy mode in the BTC US dollar. So I always say, and let me just remove this line for a second, I'm always saying that at the end of the day, you are going to be much more, you're going to be best served if you incorporate as part of your entry mechanism, entry trigger, technicals, because technicals are going to be showing you the way, the ultimate path that the market intends to go to. And so let me now revert back into the selection of markets that I have my eyes on this week, and then we can just go and revisit some of the FX pairs. I mean, so much for me saying that I want to stay away from FX pairs, because through cycle analysis, it looks like there is quite a number of opportunities based on that entry mechanism of cycle analysis. So let me give you a bit of the big picture here. So this is the state of affairs, or the state of cryptos, right? So essentially, we continue to be holding this base at around the 32,000. We've seen an incredible amount of absorption. So I'm expecting that at some point, all these sellers are just simply going to be drying up. Now, for those of you that have been living under a rock, we had, for the most part, 3 or 4 main drivers. We had, from these highs, we had the Tesla's founder Musk spreading fat about Bitcoin being a dirty asset, and one that utilizes way too much carbon into the atmosphere and so forth. And that actually led, believe it or not, one single individual to move the price of Bitcoin over 10,000. Now, we have to recognize that at that point, there was an outrageously high, levered market, right? So people had been leveraging up to the boots, and that led to a major drop in BTC US dollar. We also had the greatest migration we've ever seen of Chinese miners away from China. There's been a significant crackdown. And also, last but not least, it looks, and this is something that I've shared with the mentor room earlier today, there seems to be a grand plan by governments, I think orchestrated and led by the US Treasury. And there is a task force, it's called FTTA, and they're actually looking to implement some guidance, some regulations into the crypto space, and those that actually don't follow the rules, those that don't comply, are actually going to be facing some severe consequences. Now, this has been referred as soft law, because you have no power to actually be influencing the laws of other countries, but those that don't avail to these rules are also going to be having certain, it's going to be undermining the relationship with the countries that are proponents of these rules. Now, there is a date that has been revised as per last week, and that is October 2021. So in October 2021, it is expected that we're going to get news from this governing body. It's like an official governing body. And up until that happens, I believe that there might be a slow going in the crypto sphere. Hopefully, I am proven wrong, but I don't think there's going to be that much institutional involvement as long as there is not that much clarity in the regulation front. And I've also shared a report where it clearly states all these guidances that are intended to be put into effect later this year. And if you go to the Reddit forum, you will have major in-depth details of all that I'm talking about. This is just the summary of it. So I believe that that's a third driver. Now, that being said, doesn't mean that short term we're not going to have opportunities in the crypto sphere. Like, for instance, a revisit to the 40,000, a relief rally. Ethereum now, it is starting to actually see a bit of light at the end of the tunnel, and is recovering. And I think it's going to have a hard time breaking up. But the signs that I'm seeing, by then trying to translate this macro picture into the individual cryptos and which ones are actually acting as the leaders, I'm starting to see a few green shots here. Okay, so let me give you an example. We have one asset, and that's Axie. Now, there is a website called Token Terminal. For those of you that want to be involved in the crypto sphere, either in the foreseeable future or already are, I urge you to follow this website, tokenterminal.com. It actually documents the amount of revenue that all these tokens, all these crypto projects are generating on a 30-day basis. We can see here that Axie Infinity is the one that has the highest revenue as per the last 30 days, 18.1. So whenever people are saying that fundamentals are decoupled in the crypto sphere, well, with some exceptions, because here in the ISX BTC, we are having an appreciation that is not too shabby. I mean, we're talking a 150% appreciation in AXS, right? So let me give you what would have been here. And by the way, I have not been involved in this market, even though I'm talking about it, because to me, this is a market that up until pretty much this week, it didn't really make any statement of intent. There was maybe one or two that we could have singled out, but now we're starting to see more and more cryptos that are making the right movements, okay? So let's go into the AXS market for a second, and let me show you what would have constituted here a valid breakout of structure, okay? And I've already marked with an arrow this market. So essentially, here we can see that after the printing of this candle, we left behind, let's maximize the chart. We left behind this supply and that supply. And so there was an air pocket up until that resistance. Now, going back into the chart, this one carried higher volume, almost touching the average volume, but there was certainly an increase. And most importantly, we had 4 out of 4 metrics looking at momentum and structure heading in our favor. So this is just one example that after the trigger, this market has gone for over 100%. Okay. Now we've seen more markets acting in this manner. For instance, GRT. GRT is a project that is it's the graph. The graph is a top 100 crypto asset. And I'm starting to see that the high flyers are the large caps. So, and that makes a lot of sense. The market is going to start transitioning into Ethereum, large caps, and eventually, if there is enough of momentum, we might see the market, all this capital spilling out into mid and low caps, right? So, what I've seen in here in the GRT, pretty much same picture. So we had a level of resistance. It got breakout. Now, if you actually wanted to capture this trade, it should have definitely been into lower time frames. And here we can see very nicely that if we actually look into the 4-hour, once that resistance actually got broken, and look at all this volume that came through right here, right here, right here. So we're starting to see that speculative flows are heading into these markets as well, okay? Now, the entry, and this is what I wanted to touch on, in this market should have definitely been at these lows, because we're not seeing any consolidation or any low volatility. Right now, trading this market is very, very highly speculative and too risky because of the volatility and being so out of whack from the actual mean area. Right there, you have it, okay? So this is some of the markets. Now, which ones I'm monitoring today? Well, we got Atom. Atom, this is the only position that up until this point I've entered today above this high. Why? Because we're having an air pocket up until that line, okay? Up until that line of resistance. That is one market. This is one market that can offer short-term opportunities. Now, Matic is about to explode if we actually break above this resistance. At least in my opinion, we have come all the way to a major area of support. We had an explosion of demand, second time around rejection, and now we are having a very, very tight consolidation right here. Okay, one more, and I'll be passing the microphone to Terry. One more that I'm noticing here is, let me just say, FTM. FTM, as you guys know, it's, not FTM, it's the FTX. Let me just find it. Must be in purple, perhaps. Let's see. No, let me just find it here. X BTC. FTX BTC. Oh, FTT, sorry. FTT. SSCT? No, get confused with the tickers. Is FTM. Give me a second. There you go. Okay, so FTM, if we actually break this blue area right here, this is going to constitute a breakout trade. But we need to see acceptance beyond this line with higher volume. If that is the case, and we see higher volume breaking through and accepting, we actually could be easily targeting that level. And that's a market that I'm interested on, especially if we are bouncing off a very important level of support, okay? So these are some of the markets that I am looking at. I've also been highlighting others. Some might actually not be doing much today, but certainly these are where your eyes should be. Ergo is another market that I'm interested on, starting to see the right type of price action. We got the tightness in the consolidation. This is a prerequisite and a precursor that you always want to see ahead of a breakout. You want to see that the BBW at this line, it is actually it is dropping like a rock, and it's actually sitting below this orange line, which is the BBW mean area. If now we see higher volume, involvement of traders above this previous resistance, then we can actually see another significant movement. So those are some of the markets that I'm looking at. Now, I would be very fixated in the next 24 hours on what Ethereum BTC does, whether or not we're going to be breaking on high volume or not. I gotta say that we have a bit of a glass half empty here, because on the 4 hour, this is the 4 hour, Ethereum BTC did have a breakout with higher volume, but still on a Sunday. And that is not being reflected on the breakout of the daily with lower volume. Here we have, notice here, we got, a little bit of a tick up in volume, but far below the moving average, okay? So that is the market that, in terms of price action, it has accepted in the right location, but it doesn't carry the type of, volume that would be solidifying that bias, So, it was Sunday, so that obviously has to be recognized as well. So let's just wait for what Monday unveils, and we'll take it from there. Terry, yourself, you've been also highlighting a few other markets. Now I've got your screen back on again.
Okay. Well, look, most of the stuff that I've been highlighting has been in the FX space, or the metals. I haven't been looking that much at the others in the last few days because I've been playing with some other stuff. But also, a nice one that I'm still waiting for the pullback on is EuroCAD.
Okay.
You can see here the EuroCAD short. We've just come off the top of the long-term dominant cycle. We also have the short-term dominant cycle in our favour, so we have both of them supporting the move. We have, in this case here again, if I go to the daily time frame,
it's a really nice breakout of a structure here.
It's a really nice break of structure as well. So you can see a nice support by the daily time frame as well, where we have the long-term dominant cycle heading down and the short-term dominant cycle just starting to roll over. And this is an 8-hour trade. And as Ivan just pointed out, we have a great break of structure. So it's got everything that I look for in a trade. The only issue for me is that the stop loss, if I enter down here, is just too wide. And so I'm waiting for a pullback into that breakout level to actually enter this order. So I have an order sitting in place waiting for that one.
And that's the 8 hours.
That's the 8-hour time frame. And one other that I could mention is, and I mentioned this morning, that Bitcoin, which I've been in a short for a while, started off, you can see my entry was down here with my stop down below this level. It moved off nicely, but of course hit that level of resistance where I expected it to stall a bit. I was hoping to stall a bit and then break through. That didn't happen. Unfortunately, it's come back down. My stop was at my entry by this point. It's turned back up again, as I expected it to, because if you look at the short-term dominant cycle and the long-term dominant cycle at that point, they were both in alignment with each other. So I fully expected it to turn back up, but we're now heading into this point here, where we're nearing the peak of the long-term dominant cycle, and the short-term dominant cycle is starting to turn down. And so this is a time to be really cautious.
Yeah.
If you are long with margin, so if you're long, if you're hodling Bitcoin, I wouldn't be concerned about it at all. But if you are long with margin in Bitcoin, then I think that there's a possibility that we could have a bit of a sideways action here, and then perhaps a rollover on the top of this, and perhaps another attempt at these lower levels as we pull back down to this long-term cycle.
Can you keep the same time frame, but zoom out the chart a little bit, because the cycle highlighter in the 4 hour has really been quite pristine. Do you mind zooming out this 4 hour? Zooming
this
out.
You mean?
Yeah, but zooming in. No,
the other way.
Yeah.
The other way.
No. Yes, the other way. Zooming out. Like from what I remember last time that you shared this chart with us, the cycle highlighter in BTC US dollar has been very, very accurate in depicting.
Yeah, it certainly has. I mean, you're talking about these levels here.
No, I'm talking about
this one again.
Yeah, the cycle highlighter in the long-term time frame. So for that to be seen, we have to zoom out the chart. This chart, the 4 hour. So this 4 hour chart, if you were to zoom it out, then we could see the cycle highlighter. Much better. There you go. There you go.
Oh, I see what you're saying. Yeah. Well, yeah, it's okay. I mean, it goes back a long way, and it is very supportive. I mean, really the key cycle in Bitcoin, in my opinion, is the daily cycle, which is actually coincidentally, that red one that you're seeing here on the 4 hour is actually the very strong cycle on the daily that we're following. That's the one that's really pristine on the daily time frame. But the daily time frame is a bit high for me to trade, so I'm actually trading the 4 hour. That's the same cycle. But it's certainly following this lower short-term dominant cycle very well over the last few weeks.
Yeah.
And so
looks like both are pointing lower now, and well, they're about to be pointing lower.
The long term, not yet.
No, the long term, actually, it's going to start looking a little bit more precarious for BTC. I would say the second, heading into the second week of July, because right here we would be having a peak in the dominant cycle, and then we also going to be very much departing from this peak in the long-term cycle. So that's when it really is, I guess, testing, a bit more testing for the...
So we're talking at this point right here.
Exactly. Yeah. That's going to become a bit more testing for the commitment and the conviction of the bulls that we've seen continuously buying off this 30,000 and absorbing whatever supply has been coming through the books. So, I mean, it looks like we might have a few weeks from that, entering the second week of July up until towards the end of July, where this
July the 21st there. I think this is going to be our next significant low for Bitcoin in around this area. Now, by a significant low, I don't necessarily mean it'll be lower than here. It could be simply that it drops down to back to this level and sits around there. But I think once we're past this level, I'll feel much more comfortable with longs on Bitcoin again. But at this point in time, I certainly won't be taking any intraday longs on Bitcoin from this point on.
And I gotta say that the BTC US dollar has been one of the the most messy price charts that I've seen. Like, we seem to be going nowhere. We are barely respecting any breakouts of a structure when it looks like we are breaking finally that midpoint of the range that would be sending us all the way to the previous range high. We are breaking back lower. It looked like here we would be having a successful rotation back up with almost 3/4 of the way being recovered back up, and we just kind of failing at levels that are so awkward. It's like if you were to be a seller, you would think, and this is really after tens of thousands of hours looking at structures in the market, whenever you made it to the 3/4 of the way up in this latest push to the upside over the weekend, you would think that if you're a seller and you really want to come in with size, you're going to be looking for these areas of liquidity. You're going to be letting the market have a bit of a poke its head above that high. But again, it's it is behaving in a rather random manner. It looks like there is very poor commitment to be taking BTC to either side. Now, that being said, let me give a lesson to those that are watching us, and I suppose that this can reaffirm why it is not all lost when it comes to potential development of trends in ALTS versus BTC, which is really what matters if we want to be stacking more BTCs in our account. Now, as long as BTC US dollar for a number of weeks continues to go absolutely nowhere, and we continue to be treating water around these levels between 30 to 40,000, and this is a level that keeps being tested and failing, and also above here in the 40,000 vicinity, we are unable to break this. Believe it or not, this kind of range action is going to be a tailwind for alts, as long as we have Ethereum heading in the right direction. So let me go now into Ethereum, because it's all about connecting the dots. So assumption number one, BTC US dollar continues to be range bound. Assumption number two, Ethereum as a vehicle that is going to be portraying or manifesting the health of the alts space for the most part, because many of these virtual assets are going to be sitting on Ethereum, and so Ethereum really becomes a nice proxy for the alts space. As long as Ethereum continues to be making the right bullish noises and it is breaking higher, this is the type of environment that it is conducive to be trading alts versus BTC. Why? Because the market and those that are speculators short term, they want to continuously be on speculative bets. It is in our DNA to be constantly diversifying our capital. If BTC is going nowhere and it's been more than a month, you're going to be looking into Ethereum. You're going to be looking to put your capital to work elsewhere. And I've already been showing you that there has been such a clear example in the projects that are starting to really gather a lot of momentum in terms of revenue. We got Axie. I'm actually personally looking at Pancake and all these that fundamentally look strong. Sushi, but we need the technicals to really tell us that. Now, in the case of Axie, which goes by the ticker of AXS, we've already seen that, okay? As I was just touching for a second. Now, I don't know why, but Cardano, even though it's been 5 years ever since the inception of this project, to me, Cardano, it sounds very nice in theory, but in practicality, there is not yet a platform where lots of projects are going to be sitting on. It sounds to me like it's a rather complicated language where you actually kind of struggle to find coders, and no matter what, it just keeps pushing higher. So I'm looking at Cardano as well. It is one of the highest market cap and certainly a large project that has the market intention. In terms of total volume, it has one of the highest total volumes transacted per day in Binance. Now, here's one thing. We have to make, and this is something that happens in stocks as well. And sometimes themes are more important than fundamentals. Like themes can trump fundamentals. So there are two main drivers when it comes to alts. Number one is the fundamentals themselves, and that is why AXS, I believe, has been really making it into this incredible move to the upside. Is the second most successful NFT game, okay? AXS. Now, Cardano, I believe, is more about the narrative that is being built around Cardano, the massive community it has, and sometimes it just becomes a cult. It just becomes like something like a religion, and people are just going to be buying Cardano. Look at this. Like, do you think this kind of candle would ever happen? I mean, to me, this looks like a fat finger or something in the first place. But this is not the type of candle that you get to see printed unless there is an insane amount of buy-side pressure on dips. I mean, it literally, let's just head into a 5 minute and see how long it took for this candle to drop and then to recover. Because, I think I'm not sure where it was. It's just going to the 1 hour. I mean, it probably took like 5 or 10 minutes, you know, but you can see here that Cardano is one of those that is just so stubborn. And this is what I'm looking at right now with Cardano. Let's look into the 4 hour, okay? It's a nice time frame. Cardano is building what, if you actually go out there and type on YouTube William O'Neill. William O'Neill is one of the most successful stock traders based on a breakout strategy, and that breakout strategy was very much orbiting around the signature setup of William O'Neill was the cup and handle. Now, what do you notice here in Cardano 4 hour? We do have a very nice cup and handle. Let me show you that. This is the cup and this is the handle. And we are pressing against this resistance right now. Now, if I see on the 4 hour, again, it's like really same procedure. A breakout with volume of this resistance, this gives us breathing room, about 6% of a bit of an air pocket of voidness right here. This can be capitalized. So this is one more market that I'm looking at. I'm looking out for a breakout, okay? Now, what's the daily telling us? Look at the daily. The daily is starting to finally turn around. FTs and SMTs, for those that for those that this term sound foreign, this is structures and momentum. Structure momentum starting to turn around in favor of the bulls. So this is another market that we are looking in the room to be playing long, and I'll be expecting a first traveling area, what we call the FTA, around the 44 round number. That supply was very strong right here, okay? Now, one more project that fundamentally looks very strong is Cake. But Cake has a big resistance to break through. If we don't break this resistance, I'll be actually very suspicious that we're going to be failing here. So you notice the thematic. I am actually starting to notice that there is a bunch of alts versus BTC that might be putting in a short-term relief rally. Now, we have to be aware, and based on what Terry was telling us, and Terry, by the way, I'm showing once again your chart, BTC US dollar cycle looks like it might be turning around in the second week. If this BTC US dollar range breaks to the downside, all bets are off, and you're probably going to be seeing that the BTC market is going to be sending the whole entire market into a tailspin, and we might see some dramatic sell-off yet again. Okay, so it's about constant adaptation of the ebbs and flows. This is where we are right now in the market in terms of the alts. Now, Terry, is there any other market that may have caught your attention at this point?
No, that's about it for this week. So they're the main ones that I'm tracking this week.
Yeah, perfect. Okay, if there's any other question that you guys may have, please ask away. I'll give you maybe 2 or 3 minutes for someone if you have any chat requests, etc. Romo, I think we made sure that the image was clear. Like you mentioned that the cycle highlighter was not very clear, but yeah, I noticed that moment that it wasn't clear, but it only lasted like about 10 seconds or so. So if nobody has a question, then we'll be putting an end to today's chat between Terry and I. Take it for what it is, which is a couple of traders reading the markets in our own very, I guess, proprietary way. If you're interested in digging deeper into the either cycle analytics or a more kind of, I suppose, holistic view of the market and making decisions and finding either breakout strategies, pullback, or a trap pattern that I also teach, then make sure that you visit the link down below and you can go through my mentor room. Okay, I invite you to do so. That's about it. Nobody's got questions. So Terry, thanks once again for
thanks, Ivan,
navigating through with me today's
my
markets.
pleasure.
And
Yep.
We'll chat again next time. Thanks,
All
everybody.
right, thanks, mate. Thanks, everyone.
Thanks, bye.